Well, hi and welcome to the training video. Now today we're going to be talking about phases. Now these are not the market maker phases as a standalone things that I teach through my training course. These are really interrelated, so it's part of that we're going to touch on and part of the phases that traders go through themselves. Internally this is as they go through the trading day. Now I've split this up into three main areas. Now the first one I want to talk about is this area here, which is the market maker profit release phase. Now I have a bit of a smiley face on here because this is a great phase. This is the phase where we make the money from. Now I've drawn this curve up here, which is the equity curve, and I've got 100 pips marked up the top. And these are just arbitrary figures that I've drawn in just to sort of make a graphic illustration, if you like. Now this area here, this block here, is what as traders we are after. This is the point where the market kicks off, it gets underway. This is the point where traders will say this is the start of the trend. This is the way in which we make money, and we make money at this stage very easily. There's nothing difficult about this. Once we get this right here, this is how we get in, and we then go through and we make those profits. And you'll see if you go to the web page, I talk about the slot machine, scenario of the slot machine, and this is the scenario that we're actually looking at here in one respect, because this is the win cycle, let us say. This is where we're allowed to win. We're allowed to win relatively easy. We can very easily pick these up. But the problem is, of course, that traders continue on, because without these definitive areas, without these cut-off points, which we talked about in the previous two videos. Now I know I'm going on a bit about this because we're now the third video where I'm bringing this in, but it seems that this has had a rather dramatic effect on a lot of users and a lot of other traders who just go to the website and obviously view the videos that I produce. So that's why I'm still sort of leaning towards this and sort of explaining this as we're going through. So okay, so we've got this area here. Now I want you to place yourself in a situation where you've identified this, you've gone up and you've achieved a number of pips. And I've just drawn 100 pips up there, but it could be any number of pips through that move. Now what happens at this point is that you then go into a pleasure mode. Now pleasure mode, very self-explanatory really. You've just been successful trading, you're feeling very good, you're feeling very heightened, emotionally great, so you go into this pleasure mode. Now what happens at this stage is two things which are quite important. At this stage, when in the pleasure mode, your caution level drops down. So in other words, the caution that you felt maybe over here when you actually started off has now been weakened, and certainly that caution level drops down. You're less likely to investigate more, less likely to do things, but basically it's going to drop down. Another thing is that your risk acceptance will now go up. That is because you're now saying, okay, or mentally you might be saying, okay, I've now got 100 pips in the bag, as it were. I've now got room to maneuver, which is absolutely the wrong way to go about this. It's the wrong way to be thinking about this, but that's what happens for many traders. So the risk acceptance goes up. So caution comes down, risk acceptance goes up, and now you're much more readily able and feel willing to go in and jump back into the market. Now, of course, what's happened at this stage is that after this profit release phase, the market was going to go into what's known as accumulation phase. Again, something I teach you as part of the course, but the accumulation phase, very, very important. You can best term it, if you're looking at that type of shape on chart, as a manipulation phase. People call it whipsaw. Basically, the goal of this area is really to confuse you. It is to take back that which was given to you very easily here, and it's very easily done. Often through this period here, everything that traders have made in this period here will go through here, the caution will come down, risk acceptance will go up, they'll start to trade, and then through this period here, they'll start to systematically give back the pips they've earned here, often with interest. So in other words, their overall equity curve is gradually going down over a period of time. Now, what happens is, of course, the mental state, if you like, going from here to here, changes dramatically. And by the end of this, maybe those pips have been wiped out, or a lot of those pips have been wiped out, and the whole thing starts to get into very emotional down. You get people who start to get on an emotional downer. Now, at this stage, they start questioning what they've done. What have I done wrong? And they then go into what's known as the indicator adjust mode. So they then go back through this period here, forget about this period here too much, they go through this period here and work out, how can I avoid getting stopped out there in the future? How can I avoid getting taken into the market at that point? And so they start adjusting their indicators. They also start to develop strategies around this type of market activity here to try and make profit out of this area here, which you can do, but it's quite difficult. You can do, but they start to develop strategies around that area there, and then again ignoring this level over here. So they focus on this area here. They go on an emotional roller coaster. Now, understandably, of course, because they've gone from the elation here to pretty much being bashed around here. So there's definitely an emotional roller coaster there. They then go on, as they get through this, and they maybe adjust little things and work this out a little bit, they get through and they recall the pleasure of what went on in this area here. And so they're now geared all up, and now they start over. Now they're ready to look for the trade again. And off they head up and then start searching around for this phase again where they can do this. Now, of course, if they then tweak things around here, they then pick up another one of these. Now, of course, these will be picked up very easily on things like moving averages, that sort of stuff. Of course, you won't get all the move out of those because, as few people will tell you, when you're actually looking at the markets live, of course, your moving averages haven't crossed yet. These things are all very good. You go on YouTube, you see all these sort of weird and wonderful indicators. They show you these MACDs, the RSIs, all these technical terms and names and things and used in the moving averages. And of course, none of these matter because these only occur at the right-hand edge of the chart where we cannot yet see. Historically, they all look great. I'm sure if you've been trading for any period of time, you're well aware of that. Okay, so they go back into the searching mode here. And what we end up here is a complete cycle. And it's actually a very destructive cycle because traders are trying to trade right their way around this cycle. And this is the main culprit that causes all the problem because this is where people start to adjust everything. And of course, give back that which was given to them earlier. Now, why is it easy? Just quickly, why is it easy to make money through this period here? Because this is the keep playing mode. This is why if you never made any money, if you never turned over an account, you would certainly be withdrawn out of the stock market very quickly. You wouldn't be trading very long at all. By allowing you to win at certain times, market makers in effect draw you in with the same mechanics, the same technology that they do on the one-armed bandits or the slot machines that we talked about, and you'll obviously see me explaining on other videos and also on the website. But anyway, so that's the cycle that these traders are going through. Now we're going to go back to what we talked about in two previous videos when I talked to you about the setting up that target, setting up that goal of target pips on there. Once you achieve that, this is how you can avoid a great deal of this because you're waiting around and picking up on these levels here. Now, what happens is that when there's another mental additional benefit to this, to setting out this stall as it were. When you set your target for your number of pips, so in other words, let's just say it is 100 pips or whatever, let's say 75, it doesn't really matter what you set, but once you've set those, what happens is something else takes over that's very interesting, and that is that you will start to be a lot more subjective about what you're doing. In other words, you'll pay a great deal of attention to what you're doing because it's all being focused down to a specific target. It's a bit like playing golf. I've got a little green down here, and we're putting along and going. If you're playing without the hole, if you're just getting up on the green and you're not actually allowed to put the ball in the whole thing becomes an open-ended game, not something that we can deal with very well. We like to be in a position as humans where we can end game. We can see something, there's the end, and that's what we want to do. If you stay within this and you don't define that period, this is what you're likely to do, is go round and round, win, you're likely to lose, you're likely to win, you're likely to lose, constantly adjusting the process as you're going round. By setting the target up, what you want to do, you will in effect become a much more focused trader naturally, not by thinking you're going to become more focused. You'll become much more focused because you'll be looking for that specific end game, just like you are when you're putting the ball in the hole when you're playing golf. You're looking for that specific end game, and that's the line when you're done. And of course, when that's set up in your mind and you've made a contract with yourself, everything will take over, and you'll actually find yourself naturally looking at your charts and selecting those moves where you know this profit release cycle is coming up. You've detected this earlier on, and that's going to be your way in which you're going to go through and then reach your target. Okay, this video's got a little bit long now, so I'm going to bring it to a close, and I hope you have a truly great day. Catch up with you very soon.